Hello and what is going on, Workhorse Army gang? Guys, today the shorts are playing even more dirty than they were before. However, I think we're still in a pretty good position. Guys, join that Discord link below. Links in the description and pinned comment section. We talk about Workhorse throughout the day. So if you need someone to talk to about Workhorse, join that Discord link. We also are free to open about any other things stock related in that Discord. So join the community. And yeah, guys, these shorts, I don't know what they're doing. They're being pretty manipulative here. We're going to be going over some new Ortex data, and I'm going to be telling you guys what I think is exactly going on with this. We're also going to be going over some Reddit ticker sentiment data, and we're doing pretty well in those regards still. We're still trending, and yeah, with all that being said, let's get right into the video. Alright, my friends, so here we are on Robinhood. We got Workhorse sitting at $15.63. Now, it's been a red day. We're down 1.76%. So, guys, I mean, not every day can be a green day. So, some of this stuff is to be expected. I just have to reiterate that we can't have a green day, and we're just going to look at some technical analysis later to see where we're exactly positioned. But I think $15.64 is still pretty strong price point for Workhorse. If we're taking a look at where these shorts have shorted, they're still in the hole right now, so I'm not too worried. I think $15.63 is still pretty good. We've got some more room to run in the future, but for now, we're set up all right. Now, you can see how we were up almost 3% in the pre-market to $16.35. And I pretty much expected as soon as market to open, we'll see some of the old short ladder attacks that we've been seeing every single week. Every time there's a run up, they're going to try to shake out some of the new hodlers by getting that market open attack going. So we saw it today, and we're going to be taking a look at some more suspicious sell volume that we found earlier. One of them at a key support level, which bumped us back down into this range. So we're going to be looking at that in a second. Now we're moving over to Ortex now, guys. So earlier today, this short interest changed, and I've been watching this religiously. It was up to 2%, and the shorts got up to about 63.5%. So while this price has been falling, some shorts have been covering, which is a pretty good sign for us. Not all the shorts, obviously. Most of these shorts, about 50% of these shorts are in the hole for $2 to $3 per share. So about 50% of the shorts got in at around $10 to $13 a share. So they are still down on this. And as long as we keep the cost to borrow at 10% per share and we hold Workhorse's price, it's gonna get more risky for some of these shorts to hold. And this cost to borrow, guys, the cost to borrow has been going up, not down. So it's going to get more expensive for these shorts to stay in their position, which is going to be really good for us. Now, we have to look at the utilization, because currently we're at about a 98%, which is up from yesterday. However, it is not at the maximum, which is 100, which we were at a few days ago. So I expect, as our price continues to stay at these levels, the shorts are going to utilize more and more and more and more, because we saw it today. Short interest went up. As soon as our price went up, these shorts are very greedy. So they're definitely going to keep doing this. And I think that the short interest potentially can get up to 65% to 67% if all of these shares are utilized. And to just show you guys what I mean, the shares on loan just 7 days ago were at 60 million shares. As of today, they're at 70.75 million shares on loan, which is absolutely absurd. Over 10 million shares have been loaned out in the past week. That's roughly 10% of Workhorse's float, which is absolutely insane, and this is not sustainable, guys. What these short sellers are doing, it's not sustainable. So if we keep this up, if we hold our shares and we don't let this price drop below $15 a share, $15 a share is going to be our new price target to keep Workhorse above, to keep these shorts down. And we can also see the estimated short interest percentage of the free float. 1 week ago, it was 52.4% of the float being shorted, and then today it's at 62%. So guys, these shorts are getting greedy. And that brings me to the next point. So roughly 50% of these shorts were in at around $10 to $12 per share, like I said earlier. So the other 50% of shorts are in around $13 to $16 per share. So if we can break out of this $16 range and hold, that would put 100% of the shorts in the hole, because 50% of the shorts right now don't have too much of a loss, which is what we need to change. We need to make their losses greater, which would put them in a much worse position than they are in right now. If you want up to $70 in free stock just by depositing at least $1, use the link in the description or in the pinned comment section to sign up for Public. Public is an investing social media app. So it's a stock trading brokerage, but it's also a social media, so you can follow people like me and other influencers and celebrities that use the app, but you can also just buy and sell stocks. You can see everyone's portfolio and it's great. They have amazing customer service. They rely off tips alone, so you know they're going to be delivering the best possible customer service. I love Public, up to $70 in free stock using those links in the description and pinned comment section, as long as you deposit at least $1. Guys, let's get back into the video. And I will show you guys what I mean. So you can see the short interest percentage of free float for the past few months on average was anywhere from 25 to 35%. As I'm scrolling here, you can see where that is. And then you can see here at the end, as of June, the short interest shot up all the way to a whopping 63%. You can also see that around the May time period, when Workhorse was trading in the $8 to $9 range, a lot of the short interest spiked up. So it went from around 30% short interest to around 35% short interest. So there's also a lot of shorts that went short when Workhorse was at the $8 range, and those are the ones that are hurting the most right now. So the old shorts that have about 50% of the short interest, those shorts are hurting only for a few dollars, and then another 50% of the shorts are in around these new price levels that we have been trading at recently, and those shorts aren't too much in the hole. So what we really need from Workhorse is to see Workhorse hold above $16 a share. All right, so here we have the technical analysis that these lines have stayed the same. You can check my other videos. I've had these support and resistance levels this entire time. So you can see as soon as we broke through this resistance level right here, we shot up all the way up to $16.30. We hit that after hours last night, which was awesome. Good job to you guys. And today we saw the sell-off. It bounced off of this support line, which is good for us. We want to see that bounce. We want to see us hold that $16 price range. Like I said, there was really limited opportunity to short in some of these elevated price ranges. And you can see from this channel where majority of the volume was traded. About 50% of the shorts were in from anywhere around $13.61 to all the way to $16.30. So if we can continue to climb and close above this current resistance level, that would be amazing for us. And then ideally getting above $18 a share eventually, that would put us in an amazing position. All right, now here we can look at some of the sentiment indicators. So we go to the 4-hour chart. You can see Workhorse is number 3, which it was actually dominating this chart as of earlier today. A lot of pre-market hype, and a lot of it has to do with it being removed from this daily popular ticker section. However, we are still doing much better than we were last week. On the hour section, we're number 2. Tesla's been popping off today, and then the new section, we are here down at number 6. Now, we were dominating this whole section earlier, so I wouldn't be too worried. Very, very volatile. People change their minds based on whether the stock is going up or down within the last hour or so. I would be happy that in the past 4 hours, we are still sitting at number 3. And our overall score from the popular section has gone up as well. We used to just hang out around the 7,000 range. We are now at the 17,000 score. Taking a look at swaggystocks.com, you can see that Workhorse has moved up to this number 4 spot. Now, you have to keep in mind that this thing is changing on a daily basis. And you can see that Clover, Tesla, and Wish are all above Workhorse. Now, if we look at this old live feed from Reddit, Wish and Clover do not appear on this chart. So you have to keep that in mind as well. You won't see Wish or Clover on this daily discussion. So Swaggy Stocks is definitely a bit more accurate. Now, if we scroll down here and we look at the ticker sentiment versus comment volume, you can see that Workhorse has been definitely increasing in terms of positive sentiment over the past few days, going all the way up to 4% of the total comment volume, and we had a peak around June 10th having about 7% of that total comment volume. Now, if we continue to see some upward price movement, I'm very sure that we'll continue to see Workhorse dominate Reddit. Another huge catalyst is that there is a new SEC regulation against some of these short selling practices, which should force some shorts to close their positions over the next few days. This new regulation is active as of today, and we'll see what happens. If the short interest goes up like I predicted, then obviously this rule is probably not as effective as we might have thought. So overall, I think that we are in a great position, and we would be even greater positioned at around $18 a share or more. If we start holding the $16 to $18 a share level, that'll start putting a lot more pressure on shorts than we have right now, because only about 50% of the current shorts are currently suffering from the current price levels. And if we get to that $16 to $18 range, that'll start putting 80 to 90% of the shorts in the hole, which is what we want to do. So if we can get above $16 and hold, I am very, very confident for this Workhorse squeeze. Workhorse is one of the only companies with high short interest that actually has a promising future. You can debate about Workhorse's revenue structure all day and their production capacity, but you can't debate that their technology is going to be useful in the future, and it has a lot of useful future applications. And this is one of the only companies that we can see a fundamental shift to the upside that will destroy shorts. Potential catalysts to look forward to in the future is a potential buyout from a bigger company. If a bigger EV company decides to acquire Workhorse, that would be an absolutely huge catalyst inducing this short squeeze. That's exactly what happened with the Volkswagen short squeeze when Porsche bought them out. Another thing to look out for is new contracts with other delivery companies, whether that be UPS, Amazon, FedEx, etc. There are definitely some other companies in need of Workhorse's technology, and a lot of the shorts are only factoring in this USPS deal when Workhorse can easily get deals with other companies as well. A lot of people in the comment sections don't know whether to buy shares or whether to buy call options on Workhorse. So if you buy shares, you're actually increasing retail's percentage ownership, which currently we only have around 50% or so. If you buy call options, you're buying a derivative on the shares. You're not buying the shares itself. It's not increasing retail's ownership of Workhorse. So what that means is that although you can profit greatly off of a potential gamma squeeze and short squeeze if you buy leveraged call options, at the end of the day, it's not going to be increasing retail's ownership in Workhorse, and that is what we need in order to get this short squeeze to happen. So personally, I will continue to say that shares are the best way to play this one out, because number one, they're less risky, and number two, they help increase our ownership and help increase our potential for this to squeeze. Now, the other thing about call options, there's very high implied volatility for Workhorse currently. So let's just say you buy an $18 call option, you're going to be paying a very hefty premium for that. And if it's a short dated contract, Theta will be taking away a lot of money from you on a daily basis, giving the actual power to the seller rather than you as the buyer. If you just buy shares, you're not paying any premium for the volatility of the stock. So with that being said, if you buy shares, it gives you the best value. So I would be very careful buying call options on Workhorse, and personally, I would prefer for you guys to buy shares. Today, I bought another about 70 shares of Workhorse, so I was very confident. I bought it during the little dip that we got, and we're seeing a little bit of a recovery right now, which I'm very happy about. And with all that being said, I hope you guys enjoyed the video today. I tried to make this one more informative and less hype-based, so I hope you guys enjoy both of those types of videos. because I like making both. I like to scream at the camera and have fun with you guys and make you guys laugh, but I also like to provide you guys with solid information and due diligence as well. So with all that being said, that's about it for the video. Make sure you guys leave that like, subscribe to the channel for more, and check out those links below to sign up for public, because you get up to $70 in free stock just for signing up. Anyways, guys, I hope you guys enjoyed, and that's about it. Peace.